I mean, semi's down 7.5% in a couple weeks. Cloud down 9%. Software down 5.5%. NASDAQ down 4.5%. Is it done?
Don't think it's quite done yet because of where yields are. If you remember last time we were on together, I said you've got to watch the 10-year. The 10-year sitting over 4% for a couple of weeks is going to cause a problem in the long duration names. So I think you still have some consolidation. But look, this is healthy. This is not the sign of a teetering market. This is a bit of a consolidation, and it's a place where you can really start to think about adding. We don't like to time the market. It never works. We're seasonally weak here. It's okay. So, you know, I think there's more upside for the rest of the year, even as we come into seasonally weak August and September. And tech, since it led the market the first half of the year, if we're going to move higher by the end of the year, tech has to be participating.
Yeah, no, there was a note on that today. We'll get back to the conversation in just a minute, though. We are getting some new news on U.S. Steel, which has been making some M&A news today. Pippa Stevens with that story. The update for us. Pippa, what do we know now?
Hey, Scott. So S-Mark announcing that it has offered an all-cash offer for U.S. Steel shares. It would be $35 per share, all cash. Now, of course, the company rejected the Cleveland-Cliffs offer, which was $35 per share, but a mix of cash and Cliffs stock. And over the weekend, U.S. Steel did say when rejecting that offer from Cleveland-Cliffs that it had received multiple unsolicited proposals. So once again, S-Mark announcing an all-cash deal for U.S. Steel. Stock up now 40% on that. Back to you.
Yeah, Pippa, thank you. That story getting a little more interesting, right? I mean, you had the Cleveland-Cliffs CEO on the network today suggesting that he thinks the deal is going to get done with his company. So we're going to see how all that develops. Pippa Stevens, thanks for the update there. Back to the conversation. Jordan, I come to you on the tech sell-off. Buyers obviously coming in today on NVIDIA and some of these other chip names, and most of the mega cap names were up as well. Do you think the sell-off is done?
I'm actually cautiously optimistic on the sector. You know, one, if you look at the semiconductor sector more broadly, we have had a string of quarters of negative year-over-year revenue growth, and I think that starts to turn the corner potentially as soon as the fourth quarter of this year. If you actually look at the backlog of cancellations and reschedules, that number has started to slow a little bit, suggesting that there may be brighter days ahead. Also, let's take into account that you now have the CHIPS Act money. It's about $39 billion, bipartisan legislation, $39 billion that's going to be for grants and loans towards new semi facilities here in the U.S., alongside a 25% tax incentive for new semi builds here in the U.S. And that money is going to start to flow through as well, providing much support, I think, for the sector. So you paint this picture, right? Obviously, generative AI, semiconductors, these chips are going to be incredibly important to that transition to the next stage of generative AI. And so demand is likely going to surge and remain very, very robust over the next couple of quarters. So I'm cautiously optimistic on the sector. Now, valuations, political uncertainty remains to be the headwind. But again, I think there's a good reason for the optimism.
I wanted to go back, Alicia, to a point you made, whether the market needs technology, these mega cap tech stocks to perform it, and if so, to what degree? And I mentioned there was a note on that. It was from Bespoke today, who wholeheartedly agrees with you. And I think most people probably would, just given the size of tech in the market itself.
Right. So, look, the top 10, we're near 32% of the market. 8 of those names are tech names and communication services, which masquerade as tech. So those names have to work to get much higher in the S&P. I think you can tread water with the rest of the market participating. I think most obviously the energy names have been very strong since mid-June. WTI is up 22%, driving energy names higher. So you've seen a broader participation in the rest of the market. Today, obviously not. We're going back to the first half of 2023 trade. But to the extent that you broaden out, it is healthier. And I'd rather see the S&P be in a range in the short term and have the rest of the market participate so we can move higher into that seasonally strong into the end of the year. And to the extent that we think about chips and the CHIPS Act, we're telling our clients to invest thematically. So we're building thematic baskets to take advantage of the reshoring and of the IRA and all these things that are happening in the economy, because there's so much money coming at certain industries and certain parts of the economy, helping to keep, of course, GDP up.